we're quite pleased with the good start of the year. Although topically you see a -1% growth if you strip off voice and subs. Our focus has always been on the data business. So the data business has grown, albeit slightly lesser than what we would have wanted. But I think it's a healthy start to the year. It's grown year on year at 20%, which is good, helped by of course M&A that we did last year. On profitability, I would say we're quite again happy. Last quarter we ended at 18.6. I would like to remind the viewers, our ambition has always been to operate in 23 to 25 range, which we have been doing until last year when we did 2 acquisitions, which were margin dilutive and pulled our numbers down. But we then also advised the market that it's our ambition to get these back. So you see the first quarter in the year. As we inch up the margins from 18.6 of Q4 of last year to 20% already this year. So I would say we are, on the right track. Growth is of course the focus, and both India and international. We maintained our stated position that we are a market leader in India, and we would like to cement that. There's a lot of headroom to grow in international markets. Acquisitions have happened in international markets. Revenue synergies will also see through coming in international markets. So there's opportunity for us to grow in international markets too. But as far as I'm concerned, both are important, both India and international.
What's the revenue contribution mix right now, Kabir, overseas to India?
Overseas is slightly over 50% already now. So the balance will tilt, and shift towards international. So for sure, yeah.
So where do you see it going? Where is it now exactly, and where do you see it going? The focus on the overseas business, because I know that you're boosting your UK subsidiary as well. So just trying to get a picture of what the roadmap is.
Yeah. No, the international will continue to grow, and it is, as I said, now balanced, around 51, 49 kind of a situation in favor of international, and this will continue to grow. The UK subsidiary is actually a different thing altogether. If you see, our overall strategy is of course to double our business by FY27, and I would say that's just the start. And after that, our main focus is we need to be relevant to our customers in the digital ecosystem. We want to be the digital fabric to all our enterprise customers. So opportunities will continue to evolve, and we need to stay relevant. As part of that staying relevant, and as part of aligning to the strategy, is to look at our legal entities, and is our structure amenable, and is our structure aligned to realizing the strategy potential, is what we are looking at, and this is only the first step. We did already set up an entity in Switzerland back in March, making UK, which is a step down subsidiary, a direct subsidiary of the Indian holding company, is one of the steps that we're doing, and there are several more that are there, which is going to simplify the legal structure. So whether it is an organic growth that we're going to pursue either in the UK region or I would say in international markets, or an inorganic opportunity that we would want to pursue, for which UK, Netherlands, become the right jurisdiction from where you can do a good acquisition. So those are all, I said, the preparations that we are doing to ready this company for realizing its ambition.
Kabir, let's round off with your guidance. So your margins are robust in voice, but its revenue contributions are flat at, about up, I would say, year on year, but about 8.8%, while data is the bulk of your revenue contributions. Do you see voice contributions increasing? What is your consolidated sort of margin guidance that you're looking at? You're already at 21.5. Do you see that improving over the fisc?
I would say our focus is not voice. Voice business is always managed at net revenue margin or gross margin, whichever way you look at it. That's how the business is managed. Our strategic focus is data. But the overall margin, our ambition has been the 23 to 25, as I've said many times before. we would continue to stay in the 23 to 25, guidance. We slipped back because of acquisitions. And let me remind the three, parameters where we departed from our ambition was leverage, ROCE, and EBITDA. Leverage will get back to under 2x already this year. So you'll start seeing that, come through. We are at 2.2x now. We used to be at as low as 1.3x before the acquisition. But all of that headroom we created was only to reinvest back into the business, not to stay there. ROCE was at 17.5% this quarter. We will get back to greater than 25 next year. You'll see one more quarter where it slips because of the 12-month trailing, formula that we actually use. We acquired Kalera in October, so you'll see that impact for one more quarter before it starts inching back up, and EBITDA will come back to its ambition. I don't like to give guidance. I would call it ambition of 23 to 25. Hopefully in 2 years' time.
By when? Okay. So 23 to 25 in 2 years' time. So are we going to stay in the 21.5% range for FY25 largely, 21 to 22?
So we are there at 20% now. We will be in that range, of 20 to 21 in this year. Okay. That's the range that we will be in.
All right. Thank you so much, Kabir, for speaking with us. That's the Chief Financial Officer of Tata Communications talking with us.